I told you the physical silver market is experiencing a silent bank run. Not on dollars, but on the actual metal itself. The evidence is staggering, and it points to a supply crisis most people still don't see coming. Let's talk about the undeniable data first. For over a year straight, month after month, we have witnessed record-breaking deliveries of physical metal from the major exchange warehouses. We're not talking about small amounts. In a single month recently, over 60 million ounces of silver were taken for delivery. Who has the capital and the intent to move that much metal? It's not retail investors. This tells us one thing: the most sophisticated players on the planet, sovereign wealth funds, national banks, massive industrial consumers, are not trading paper promises anymore. They are demanding the real thing. And this strategic, relentless accumulation is creating a drain so powerful it is beginning to break the system's ability to pretend everything is normal. So, why does this matter to you? Because this physical drain creates a fatal disconnect. On one side is the paper market of futures and ETFs, which can be manipulated with margin hikes and short-term trading. On the other side is the shrinking pile of real, deliverable silver. This gap cannot exist forever. One must eventually snap toward the other. Let's look at the recent volatility. We saw silver spike dramatically, then get hammered down. The mainstream narrative called it a speculative blow-off top. But that's missing the real story. Those sharp drops were engineered. Major exchanges raised margin requirements, the amount of cash needed to hold a contract, not once, but twice in rapid succession, during thin holiday trading. This forces leveraged speculators to sell, crashing the price temporarily. But here is the crucial, game-changing difference this time: in the past, like in 2011, that tactic worked. It broke the rally for years. Now, it fails. The price rebounds almost immediately. Why? Because while the paper traders are getting squeezed out, a new type of buyer is waiting patiently. These are the deep-pocketed, cash-rich entities, nations and corporations, who don't use margin. They see the engineered price drop as a gift, a clearance sale on a critical resource. They step in and buy the physical metal that the paper sellers never actually owned. This is the new battlefield. The old playbook of controlling price through paper contracts is crumbling under the weight of actual demand for delivery. When nations decide something is critical to their security, they don't speculate on its price, they secure its supply. This brings us to the terrifying reality for the retail buyer. What does this institutional hunger mean for availability? The evidence is clear and alarming. Major bullion dealers are reporting extreme difficulty sourcing product. Common items like American Silver Eagles and 100-ounce bars are becoming ghosts, either wildly overpriced or simply marked out of stock. Premiums, the extra cost over the spot price, have exploded. There's even been a bizarre, temporary anomaly where junk silver, pre-1965 coins, could be bought below the official spot price. Why? Because the refiners who processed this scrap were themselves getting margin called on their hedging positions and stopped accepting new material. That window has already slammed shut. It was a fleeting signal of a supply chain in acute stress, snapped up by large dealers who understood the moment. For the average person, the message is clear: the easy, cheap access to physical silver is vanishing. Let's talk about the why. Why is this happening with such intensity now? First, silver has been officially classified as a critical mineral. This isn't just a label, it's a declaration that changes how governments and industries behave. Second, the industrial demand story is no longer theoretical. It's a current, accelerating tsunami. Every solar panel, electric vehicle, AI data center, and 5G device requires silver. This isn't cyclical demand that will fade with a recession, it's structural, mandated by global energy and tech policy. Third, and perhaps most profound, is the geopolitical shift. We are watching a fundamental reorganization of the global order. Alliances like BRICS are moving beyond economics into areas like coordinated military exercises. Nations are seeking ways to operate outside the traditional Western-dominated financial system. In this environment, holding physical precious metals isn't just an investment, it's a strategic move toward monetary and energy independence. So, what is the endgame? We are heading toward a moment of reckoning between the paper market and the physical market. The paper market is a giant, inverted pyramid of promises. The physical market is the tiny base of real assets holding it up. As the base is chiseled away by relentless physical accumulation, the pyramid becomes unstable. The physical market is the tiny base of real assets holding it up. As the base is chiseled away by relentless physical accumulation, the pyramid becomes unstable. The only possible outcomes are a dramatic, violent upward repricing in paper to reflect physical scarcity, or a default event where paper contracts cannot be fulfilled. For you, this means the landscape has fundamentally changed. In a world of digital promises, the ultimate leverage is owning something that can't be printed. What should you do? This is a framework for understanding, not financial advice. First, recognize the difference between paper silver and physical silver. They are becoming two different assets. Second, understand that volatility is not a sign of a failed rally, it is the symptom of a dying paper paradigm clashing with a new physical reality. The dips are not caused by weak demand, but by mechanisms designed to harvest weak-handed paper holders, with the metal immediately going into stronger hands. Finally, look at the miners. If physical metal is becoming priceless, the companies that pull it from the ground hold incredible latent value. Their leverage to the metal price can be exponential. If this breakdown of the most critical shift in the silver market in decades made sense to you, please hit the like button. It helps more people find this analysis. For clear-eyed guidance on navigating this new reality, make sure you're subscribed to Winds of Thought. Now I want to hear from you. Do you believe the physical shortage is real, or is this just another hype cycle? Let me know in the comments.